Okay, we're halfway through. We're gonna have 3 more categories before we have a little break for coffee, so make sure you stick around. And also, if you like what you see, hashtag IFGS 2018. I don't have to spell it because they're letters. So IFGS 2018, financial inclusion, an amazingly important topic. There are 2 billion adults worldwide who are without banking. So this is one of the most powerful categories personally that I see that can really affect the global economy. And also in the UK alone, there are 1.5 million unbanked adults. So 73% of all financially excluded people live in just 25 countries. So when you start to think about the geography and the geopolitical situations that we're finding ourselves in, this is going to be a very empowering area of development. And then between 2011 and 2014, the global unbanked population fell by 20%. So we are doing a great job so far, but we can do a lot better. And I believe these next 3 companies will show us exactly how. So without further ado, let's bring out Priya Mystery from Commuscore. I wish they would turn the music up because I feel like I want to just, yeah, there you go. You pumped it up. Good to see you. Also, Neil Kagatur from CreditSpring. Neil, good to meet you.
Hey, nice to meet you.
All right, and last but not least, Garrett Cassidy from Trezeo. Okay, you guys know the rules, yes?
Yep.
Priya, you're gonna go first? You ready?
Hold on.
I didn't even pass the clicker on the left-hand side.
Thank you.
So where are you from, Priya?
South Africa.
South Africa. How long of a flight was that to get here? Was that
14 hours.
Oh, that's not bad.
Not bad.
Yeah.
Germany.
It's half your life.
Yeah.
What were you doing before this? Not before today, like not before you came out on stage, but before career-wise.
I've been in the banking world, so I was part of the sort of Barclays Africa team, heading up online channels, and prior to that, e-commerce. So
all right.
Retail.
Well, we're looking forward to hearing a little bit more about Commuscore. So your time begins now.
Cool. So we provide an alternate credit score for underserved individuals that are actively saving in informal markets through our mobile platform. I'm Priya, and I've co-founded this company, and we're looking to solve 2 problems. The first problem is in the informal economy. We've got about 10 million adults in South Africa and 1.5 million SMMEs. They don't have access to fair finance, either for growing their businesses or for emergencies. Why? It's because they don't have a credit score with a traditional credit bureau. Yet, those same individuals are saving $3 billion US every single year through what we call an informal saving group. More about that in a minute. The other problem we're looking to solve is that in the formal economy, we've got 4,000 lenders that are wanting to access untapped informal markets. But the problem is that they don't have any financial data for credit scoring. For the individuals that do have a credit record with a traditional credit bureau, the size of the lending market in South Africa is sitting at $15 billion US every year. So what do? We provide a mobile administration platform for these informal saving groups. And with that, we get financial behavioral data as well as financial data so that we can create a credit score for them for the formal lender. So let's talk about informal saving groups. This is a global emerging market phenomenon. In fact, there are 200 variations of informal saving groups across the world. In Africa alone, 70 million people are saving $4.5 billion a year. Now, what is exactly does it do? Well, there's between 12 to 26 people in a community that will come together and save every month diligently to either save for funeral planning or groceries or savings or investments. Now, it's self-governed, very disciplined and structured, and the reputational damage one incurs by not attending the meetings or contributing on time are so significant that it actually makes up a very efficient mechanism in terms of a financial ecosystem. Our revenue model is predominantly focusing in the next 24 months around 2 revenue streams. The first is providing the credit score for $2 per service call, like any other credit bureau would, to any lender. And the other part is around lead generation. So we're looking to take 1% of the microloan or the loan fee because we will be involved in some of the fulfillment of these loans to these saving groups. So how are we different? So think of us as a credit bureau, but a very different one. So our competitors would be a TransUnion or an Experian, and they use debt payments to actually create a credit score for individuals when they're looking to buy a home or a car. There are 2 fintechs playing sort of not quite in the space. The one is Social Lender, and they'll use social media behavioral data to actually create a credit score. The challenge is in Africa, Facebook and other social media platforms haven't had the adoption like they have in other developed markets. Tala is another one. They've been working in Kenya, and they're using mobile phone data to create a credit score. Why we're different is that there's no other organization that is taking the behavioral data of informal saving groups and actually creating a credit score. One of the things that differentiates us is that we take the manual records that are literally captured on receipt books into a digital format so that we have historical data to start working off of, and we don't have to wait 12 to 18 months before we can actually get behavioral data. We do have a patent that is pending and should come through in the next few months. Where are we at the moment? Well, we've managed to raise $108,000 US dollars in grant funding. We had an MVP in the market last year, and we've learned a lot. And with that, we've iterated and enhanced our product, and we're currently onboarding 30,000 members through an exclusive strategic partnership with a group association, a savings group association. We're also formalizing the trial structures with 2 big South African banks and testing the full value chain of not just the scoring, but the actual loan scoring as well as the fulfillment. Initially, we have a sub-Saharan focus, and we also are in the process of concluding another strategic partnership deal that has a member base of 800,000 users. So why listen to us? We co-founded this organization because we want to get more people included into our economy. It is great that we have a lot of tech and emerging tech, but if we don't address the 2 billion unbanked, we're going to sit with a very limited pool of individuals and not grow the pie. So my co-founder and I, she's been she's in the banking space. She's had about 15 years of corporate experience, but more so, she's had successful businesses in this market, and so have I. I've had successful startups and failures within this market, and we've had a lot of lessons that we've learned out of that. I've also been in the banking world, looking after online channels, but I've also had startups both in the US and in South Africa. I was also invited at the World Economic Forum to talk about digital and how it can address financial inclusion. A big chunk of the team that we are looking to build with the money that I hope we receive today is to really get onboarding agents, because the challenge with our market is that it's trust-based, okay? We need people to actually talk to other individuals and get them adopted into the platform. Building and letting it out will not work, and therefore the onboarding agents are quite critical for us. Thank you.
All right. You could have danced to that too, just kept going. Passing the clicker too. Neil K.
That works.
How do you say your last name?
Kadagatur.
That's what I said, kind of, right?
Close.
Kadagatur. How did I do? No?
Good.
Yes? Where are you from, Neil?
I'm originally from Boston, but I live in London for the past 15 years.
Boston. Anybody been to Boston?
Boston.
Okay, look. You did better than Giacomo. And he was closer. So we're excited to hear from you. You know the rules, right? Mm-hmm. So I will allow you to start. Your time begins now.
Hello, my name is Neil Kadagatur, and I'm the CEO and co-founder of CreditSpring. We've created a brand new way to borrow that will help people without savings avoid risky debt and stay in control of their lives. 40% of the country has less than £100 in savings. That's 17 million working-age adults in the UK. In the US, it's over 100 million people. Without savings to fall back on, people are very vulnerable to seemingly small shocks like the washing machine breaking or a surprise school trip for your kids, or if you're in the gig economy, a drop in hours. Without a safety net, people are forced to use credit in these types of situations. But unfortunately, most short-term credit products have bad side effects. Overdrafts are a usual way to deal with an unexpected expense. But the problem with overdrafts is they're confusing. Millions of people are overpaying because they aren't aware of what the charges are or even if they're using it. Credit cards are another common way to deal with an unexpected expense. But the problem with credit cards is they're risky. Many people don't trust themselves with their own credit card. Millions of people in the UK find it hard to resist the temptation of putting a purchase on a minimum payment and forgetting about it. It could take you almost 10 years to clear a £250 expense if you just put it on the minimum payment. Friends and family are usually the cheapest way to deal with an unexpected expense, but the problem with that is funds aren't usually readily available, and if they are, it can be very embarrassing. Finally, payday loans can be used to deal with an unexpected expense. But the problem with payday loans is that they're payday loans. They can be very expensive and risky if not used correctly. We actually aren't that surprised that credit isn't working for so many people. We think this is because there actually hasn't been that much positive innovation in a long time. Consumer loans were first invented in 3500 BC, and they're not that different to as they are today. A relatively recent innovation was overdrafts, but that's almost 300 years old now. And then finally, in the 1950s, we saw credit cards, which were hugely innovative and game-changing, but a lot has changed since the 1950s. It's now 2018. Everyone can agree how important credit is in all of our lives. Yet we haven't seen the same kind of positive innovation in the short-term lending space as we have seen in pretty much every other sector. We think it's time for a change. At CreditSpring, we're reimagining credit. We asked ourselves, can we create a credit product that offers the convenience, flexibility, and safety of other credit solutions without being risky, confusing, or expensive? We spent all of the past year working on this problem, and we think we've come up with a pretty unique solution. Think of it like insurance against dangerous debt. And this is the first time we're showing it to the world. We will charge a £5 a month monthly membership fee. That gives you access to 2 loans of £250. Both loans have no interest. Each loan is repayable over 3 affordable monthly installments. So the next time something goes wrong, you simply log into your account, press a button, and your affordable loan is on its way. We think we've created a product that is safer, simpler, and cheaper than almost any credit product out there, and should be a valuable addition to millions of people's financial survival toolbox. With the safety net in place, you can relax and focus on the important things in life. No more staying up at night worrying about the what-ifs. No more underperforming at work due to financial stress. Now you know if something were to go wrong, you're covered. With an on-demand backup plan in place, you can stay in control of your life when things do go wrong. No more scrambling around figuring out how you're going to pay for something, how you're going to pay it back. No more paying high interest at the time when you least need it. Once again, something goes wrong, log into your account, press a button, and your simple, affordable loan is on the way. CreditSpring was started at the end of 2016. We raised £2 million in July. At the end of that same month, we applied for our FCA Consumer Credit Authorization. We have a few thousand people on our email list, and that number is growing daily. And we've received really positive feedback from a number of customers over dozens and dozens of interviews. We've also surveyed the UK more broadly, and it's indicated that up to 15% of the country would be willing to sign up for a product like this. We plan on launching in the UK very soon and plan on launching in the US towards the end of the year. Eventually, our goal is to have 15 million members. We now have a team of 8 and a really awesome advisory board. We all come from some of the leading institutions in the world. We have lots of different diverse talents, but what unites us all is our mission to change the financial landscape. So in conclusion, we think this is a really big problem that's not getting enough focus. We've decided to do something about it. We think we've created something unique, and if we get it right, we can positively change the lives of millions of people across the world. Thank you.
Thank you, Neil. I'm not sure how you got my baby picture in your slides, but I'll talk to you about that after the show.
That was me, actually.
I had to go through a lot of reconstructive surgery to get all this. Garrett, also from Boston?
No, Dublin.
Dublin. Close enough.
Almost Boston.
One has donuts, the other, and I heard that there's no celebration of St. Patrick's Day in Ireland.
No,
Is that,
no, none at all, and particularly not with the rugby.
Nor here. I actually got lucky enough to have 2 St. Patrick's Days. We had one the day I left, and then when I landed, it was also here in London. So I got twice the green beer. But without further ado, are you ready?
Yes.
Okay. All the way from Dublin, ladies and gentlemen, Garrett Cassidy and Trezeo. You have 6 minutes, beginning now.
Good afternoon, everyone. I want to start by talking about Emmanuel. He's a 45-year-old self-employed driver who works here in London. And while he loves the flexibility of working when he wants, he worries about because he can spend time with his family, he worries about how he'll pay his bills when work is quiet, if he's on holidays or if he's sick. And he really stresses about how he'll pay to fix his car when it breaks down. Emmanuel sometimes has to use an expensive overdraft to pay the rent. Indeed, one time his car broke down, he had to get a payday loan to get back on the road. He also worries about the future. He doesn't have a pension, doesn't have life insurance, and has no idea how he'll ever get a mortgage to buy a house for his family. I'm Garrett Cassidy, co-founder and CEO of Trezeo. Income volatility and uncertainty are a real challenge for self-employed and gig economy workers. Trezeo's income smoothing solution provides access to a regular weekly paycheck and money in emergencies. Put simply, it provides financial peace of mind and also lays a foundation to access further financial products. So Emmanuel's not alone. The way we work is changing fundamentally, and one of the biggest trends is the shift to independent gig-based work. Self-employment in the UK has grown by 25% in the last 10 years to almost 5 million and is projected to overtake public sector workforce in the near future. Looking forward, independent work is predicted to make up over 40% of the population in Europe and North America within 10 years. And as Emmanuel's case shows, volatile and uncertain income are real and potentially crippling challenges for the self-employed. In fact, 44% of UK self-employed identified these 2 issues in their top 3 challenges of being self-employed, while they cost US freelancers up to £1,000 a year. They also act as a barrier to financial products and limit these customers' access. Only 12% of UK self-employed are saving for a pension versus over 70% of employees, while 40% of those who've tried to access a mortgage have experienced difficulty specifically because they're self-employed. So at Trezeo, we're aiming to address this underlying challenge of uncertain and volatile income. We provide financial peace of mind by turning unpredictable income into a regular paycheck. We provide access to income advances for one-off expenses like Emmanuel fixing his car. And we provide interest-free top-up loans for our customers when they need them. We also use data and machine learning to monitor income, risk, and help customers save without having to think about it. We do this by firstly calculating Emmanuel's average income to set his regular paycheck. His income is then paid into a new account provided by Trezeo, and his paycheck is paid back to his regular bank. If he's short, we will top him up with an interest-free loan, which he pays back automatically when he earns again. And we do all of this for a predictable, affordable subscription fee, which for our initial customers equates to the cost of a couple of coffees a week, which is a huge comfort when compared with the unpredictable and often extreme costs of overdrafts and payday loans for these customers. There's 1.4 billion self-employed globally, and as most people know, it's a massively underserved market for financial products. There's 68 million in Europe and North America alone today. 43 million of these are service sector workers who are our core target market, giving us a annualized revenue opportunity of over £13 billion. Our initial plan is to acquire 200,000 customers across 3 European markets, starting here in the UK, in order to achieve annualized revenue of 63 million. We'll acquire these customers in a number of ways. Direct advertising and PR is an important channel for us, and we've achieved good traction to date with Facebook and Google. However, partnerships are going to be vital to grow customers at scale, and we've built a strong network within the transportation industry initially, which is our initial launch market. We're also working to build community to drive customer referral, trust, and loyalty, and we have had some early discussions on potential financial services partnerships to bring this to market as well. Unlike Trezeo, mainstream financial products have unpredictable and often high costs for self-employed. That's assuming they can access them at all. While many products have been launched targeting employees to help them better manage their income and access loans, they're generally not available to the self-employed. And while many new services are launching targeting the self-employed, they're not addressing this core underlying challenge of income volatility and uncertainty like we are at Trezeo. We believe we've the team to deliver this opportunity. Myself and my co-founder Flavian have deep domain, technology, and startup experience. We're very strong and relevant advisors and are building a very strong team around us here in the UK. We've been working on Trezeo for over 18 months now, and a couple of key highlights. We were accepted for direct support by the FCA Innovation Hub and have applied for a lending license to complete our product. We won a place on NDRC's accelerator program in Dublin, one of the leading accelerators in Ireland. We've integrated with our key partner to provide regulated accounts to our customers, and we won NDRC's Investor Day and also Payments Dragon's Den Europe here in London late last year. We've just launched an initial pilot of our product here in the UK and are onboarding test customers ahead of a full product launch with credit in the coming months. To summarize, the world of work is transforming. Over 160 million people will be working independently in Europe and North America within 10 years, and they need access to financial products. Our ambition is to provide financial products that are designed for these independent gig-based workers so they can get on and do what they love with peace of mind around their financial lives. Thank you very much.
Garrett Cassidy, thank you. Catherine, I saw you diligently taking notes, and as you snatched the microphone, as you should. Stand up. No, just you don't worry. Yeah.
Can I ask Neil, how do you acquire customers? You mentioned email list.
Sorry?
How do you acquire customers?
Oh, well, we are still in the process of getting our FCA authorization, so it's sort of, we're not full out acquiring customers. We have an email list. We're acquiring customers using Facebook advertising. We have a waiting list that we're building up, and we plan on building that up as we start letting customers in.
And how did you come to the £5?
So how did we come? Well, for the £5 and £250 was, first of all, the price of sort of a small problem that turns into a big problem is generally around £250 to £270. That's just seems to be. If you look at lots of like payday loans and stuff, that's around the right price. We've spoken to financial inclusion think tanks. So we worked backwards from that's the price, and then we figured out how can we give this, and what will the customer be willing to pay for it, and we asked them, and it's basically the fees are a function of the amount we'll lend out and the probability that you'll use it, and then of course the default probability amongst other things.
I actually don't have a question but a comment. This is all three of you, pretty awesome space, very important space for this world, because underbanked, unbanked, very big segment, especially in the US too. I mean, so I think one of you mentioned 100 million users who can't afford to get a car repaired or have more than $400 for a safety net. One question I would say is, and any one of you can answer, where do you plan to go from here? I mean, especially from your point of view, as you're starting out in supporting the gig economy, which is a very important segment, because I would look at that segment if you're helping somebody with their basic cash needs. If this person is self-employed, I would also look at how do you help them save on taxes and other things. Yeah. So I would kind of look for your growth point being there somewhere, but again, I'll leave it up to you to answer.
So I suppose that, I mean, from the customer research we've done, there's a key challenge about accessing all sorts of financial products. And there's also, as if 40, 50% of people are going to work this way, we're going to have a problem. no matter how much we say how little employers do, they provide an umbrella of access to products. So we need to reconstruct that. From the research we've done, the uncertainty and volatile income for a large portion of these people is a key obstacle to even thinking about that. So it's solve that and then work from that to actually turn this into an overall benefit proposition for these customers.
I have a question for Priya, please. Priya, how big could this market be, do you think, in Africa alone?
From a financial perspective or usage?
From a financial perspective. You can convert users into financial numbers. I'm just curious to understand how you think about it.
Just in the South African space, right, we have, I mean, it's about 28% of the adult population that are actually not even in our ecosystem because of the fact that they don't even have an identity. So if we had to project based on the average loan size that we have, we're probably looking at about an additional $4 billion on top of that 15 billion of unsecured lending. Remember, our product can enhance an existing credit score or create one for somebody that doesn't have any identity. So we're not only looking at individuals that are completely non-serviced, even if they're underserved and they have bad credit, but are quite active in the informal savings. Our product works for them as well. So just as a very almost conservative value, it's sitting at that much. If we include the rest of the sort of Africa, remember we're 1.2 billion individuals. And a lot of those numbers of 70 million are understated because these are just what NGOs know about. I mean, this has become the financial framework to sustain the economic needs and the financial needs of so many individuals. So a lot of it is not even documented. I mean, if we had to actually get them in, first of all, from an identification perspective, that's almost the first step. And then how we grow that into more financial products, into crossing up. I mean, there's a huge opportunity.
All right, I believe we have time for one more. No? All right.
I do have a question for Priya. Who owns the risk? I mean, because you've got lenders on one side, right?
The lender would.
The lenders own the risk.
So all we're doing is providing, we're an alternate credit bureau.
Yeah.
We're not in the business of actually providing the loan. But what we do is, input a whole bunch of these other elements in data that they will never have access to. And it doesn't exist because it's been analog.
Right, and then last question for you, who's your competition? I think so you might have had a slide there, but we didn't see it. So I'd love to know that.
Okay, so in the traditional space, it is TransUnion and Experian, these traditional credit bureaus. I mean, they've also tried to get and penetrate this market, but it's so trust-based that you have to be part of the community to actually let them trust you. And so they would be our traditional competitor.
Thank you.
All right. Nice try. Thank you all for joining us. One more round of applause for these fine young professionals.